want to thank you for tuning into my interview with Shanne Sleder of RWM Home Loans. He's a mortgage advisor, and I'll be interviewing Shanne because I think it's really important in the financial world to have as many financial tools, especially as you're near retirement, to help with expenses. So welcome, Shanne.
Thank you so much, Jim, for taking time to interview me today. And yeah, I'm excited to discuss the topics we're going to be talking about.
So Shanne, one of the things you do is reverse mortgages. And I think a lot of people have heard about reverse mortgages, but can you give me a brief synopsis of what they are?
Yeah, so I've actually been in the mortgage industry for over 20 years. And I've done reverse mortgages for 16 of those years. So I do all types of different loans, whether it's purchase, refinance. But one of my specialties is the reverse mortgage for seniors. And so really what a reverse mortgage is it's just another type of loan product out there. It's a specialized one that has some great benefits that others don't. But it's a lien against your property, just like any mortgage is. But the difference is that a reverse mortgage allows a client to either free up some cash flow by extinguishing their mortgage payment and not having to make a mortgage payment anymore, or be able to tap into the equity that they've built up in their house with a reverse mortgage. And so it's a great financial tool to help clients, especially today with where we're seeing inflation and increase in costs. And a lot of times people either not having enough for retirement or feeling like their retirement assets may run out. Mm-hmm. It's a tool that will allow us to use the asset, especially here in Southern California, that we've been blessed with, our homes that carry so much value, and basically look at our house as another bucket or resource that we can use for retirement.
Now, the elephant in the room is the reverse mortgages seem to have had a bad reputation. Mm-hmm. So what are some of the most common misconceptions about a reverse mortgage?
So the one that I still hear till today, which I've been hearing since I started doing this, is that you lose your home, right? That you no longer have ownership of your home. And that is something that was back 30, 40 years ago when reverse mortgages first started, but that has not been the case for a very long time. Again, like I mentioned, it's just a lien against the property. So just like any other mortgage, there's a lien holder, and you still retain ownership to the house. It can still be in your personal name, in your trust. Any equity that's in the house at the time of you're selling the house or when the reverse mortgage gets paid off is still yours or your heirs. So that is one of the things that we hear quite often and is not true about reverse mortgages. Mm-hmm. The other thing that we hear is that you'll lose your house, you'll go into foreclosure with a reverse mortgage. And there have been many, many safeguards put into place over the last number of years to make sure that that does not happen. The bad rap came on those because what was happening was you were having maybe a senior who's 65 years old who could qualify for a reverse mortgage, who's married to a 55-year-old, and that person could not qualify for a reverse mortgage. So they were being told to take the younger person off a title so that they could get the reverse mortgage. And then when the older spouse passed away, now all of a sudden the reverse mortgage was due, and the younger person was no longer on title. They had no way to pay it back, and they were being kicked out of the house to have the reverse mortgage paid off. So that wasn't an issue with the program itself. That was more of an issue with how it was being explained and the advice that was being given. So the program did make some changes a couple of years ago that now allow people, a spouse who's younger than 62, to actually go on and stay on title and still be able to get a reverse mortgage. There's some limitations there, but it took that issue away as well. And we also hear that reverse mortgages are expensive. That's one of the other things that we hear a lot. And they are more expensive than a traditional loan. But when you look at the benefits that they give and what I call kind of the opportunity cost that's out there, it can solve a lot of problems and can be used in very creative ways to actually help people in retirement have greater retirement wealth in the end.
Hmm. So if some of our viewers are interested, can they just call you and sign up, or are there like eligibility requirements?
Yes, so it's not as stringent as a traditional loan with qualifying, but they are going to do what we call a financial assessment. So there are some things they're going to want to make sure that you've paid your property taxes on time for 2 years, your insurance has been on time, that you don't have any, mortgage lates. Credit score is looked at, not as big of an issue when it comes to reverse mortgages. But they do want to make sure, again, because they want to protect the senior, they want to make sure that the senior can continue to live in the house. They want to make sure that the senior is going to have enough money to cover their taxes and insurance so that they don't get a tax lien against their property and have that become an issue.
Hmm.
So that's a process that we go through upfront to make sure that the numbers work. If for some reason you fall a little short and you don't quite have enough money to cover that financial assessment, they do have some other options where you can have what they call set-asides for taxes and insurance out of any money that might be available to you through the reverse mortgage. So that is something that I can go into in more detail. There is a counseling requirement done through reverse mortgage, a third-party counseling requirement, again, to make sure that people understand the way they work. And we'll go over some details on your income and your expenses and things like that. Another safety way to keep the seniors safe. So that's something else that we would talk about as well.
So those are some things, like you said, that took care of some of the bad actors in the old days to clear up any myths, so you don't get finagled into something like this. So you've gone through a couple of advantages of the reverse mortgage. Can you give me an example of maybe somebody who you were able to help with a reverse mortgage in what the advantage was to them specifically?
Sure. So, the biggest advantage is obviously you're able to now tap into the equity of your home and not have to make a monthly payment on it. So it's going to help increase your cash flow on a monthly basis so that either maybe you don't have to draw out as much from your retirement account on a monthly basis, and the money you draw out from your retirement account is going to be taxed, right, based on whatever your tax bracket is for federal and for state. Any funds that you get from a reverse mortgage are not taxed because they're home equity that's coming to you. So that's a strategy, because you can take a little bit more money out of the reverse mortgage, not have to take as much out of your other retirement accounts, allow those to continue to grow over time. There's some strategies where clients are delaying taking Social Security. Instead of taking it at 65, they're now able to wait until age 70 so that they're increasing the amount that they can get on a monthly basis then for the rest of their life. We also have situations where, as seniors get older, they've got large expenses that need to be taken care of, whether it's installing a new roof, or maybe it's something to do with medical care, having to take care of a spouse, maybe putting them into a memory care facility. And we've had a lot of clients be able to use the reverse mortgage to tap into it to take care of those, big time, one-time expenses like a roof repair, that they then don't have to take that money out of their retirement account, or take care of a spouse who's in a care facility, and otherwise they'd have to sell their house to be able to pay for that facility. Now they can continue to live in that house, be, with the memories that they have in that house, and still take care of their spouse through the reverse mortgage.
Yeah, and that's been my experience, Shane, that I would say a lot of seniors don't want to go into a nursing home. They would prefer to stay in their own home. So this would be a great strategy for that.
Mm-hmm.
What happens if the homeowner wants to sell the house and they have a reverse mortgage, or probably more would happen more often, they pass away? What happens?
Mm-hmm. So the nice thing about a reverse mortgage, again, is that you're not making any payments. If you want to make a payment, you can to help keep the interest growth down. But what's happening is the interest is just accruing on the loan over time. So when you either decide to sell the house or when both borrowers, if there's two, pass away. So if one passes away and one's still living, they can continue to live in the house. The reverse mortgage is not due. When both pass away, then the reverse mortgage would be need to be paid off. And that can be done through, again, either the sale of the house or it can be done through a refinance. So if the heirs want to keep the property, they can come in, they can refinance the current mortgage, keep the home in the family. Otherwise, the home is paid off, or the home is sold, and the loan is paid off through the proceeds of the sale. Any equity that's left over would go to the heirs or to the clients themselves if they're selling. And the nice thing about these is these are what are called non-recourse loans. So even if you got a reverse mortgage right at 62, the earliest eligibility for a reverse mortgage, and you lived to 102, and you had that reverse mortgage growing for 40 years, and you borrowed the maximum amount you could over that time, and the interest was accruing, and all of a sudden we had a downturn in the housing market, and now you owed $50,000 more than the house is worth, okay? Because these have mortgage insurance on them that protects the borrower, protects a lot of the other benefits that come along with this, the mortgage insurance would kick in and would cover the difference between the house value and what the loan amount has grown to. So again, neither you or your heirs would be responsible for that extra money that would be owed.
So what are some of the reasons why someone wouldn't want a reverse mortgage? And the second part of that is, I'm sure you deal with the kids or the children of some of the seniors in the conversation. What are some of their questions, objections that you could help clear up for them?
Sure. So let's talk about the first question. When is this not a good option? And I think one of the things that's come out in recent research is that reverse mortgages actually fit into a lot more situations than what people thought in the past. It's no longer just a product of last resort, but actually a part of a retirement planning. But there still are situations where it doesn't make sense. So for example, if I'm talking to a client and they tell me that they're looking to sell their house, they don't want to stay in there long term, they think they might move out in the next 2 to 3 years due to the fact that the house is too big, or they've got stairs and they've got mobility issues, whatever that might be, then a reverse mortgage may not make sense for them, because usually reverse mortgages make sense when someone's going to stay in the house long term because of the upfront cost involved in it. The other situation that comes up where it doesn't make sense is if you've got an adult son or daughter that's living with you as well. Maybe they've got some medical issues and they're not able to live on their own, or they're not able to afford their own place, and so they're hoping to be able to continue to live in that house after the parents pass away, right? And they would not be in a position to be able to refinance the reverse mortgage into their own name with a traditional loan when that happens. Then it wouldn't make sense to put a reverse mortgage on the house at that point in time, because then that child would not be able to afford the future payment or maybe even qualify for it, and would then have to move out or sell the property. Those are the two biggest that come up when I'm talking to people. Now, some of the issues that we come up with family would be, again, if they're hoping to inherit a paid off property, then obviously a reverse mortgage would not allow that to happen unless the parents have a lot of other funds that they have that are going to be passing down through inheritance, through other retirement accounts, brokerage accounts, whatever that might be, that then could be used to pay off the home at that point in time. But most of the time, the kids are really looking out for what is going to put mom and dad in the best position. And nowadays, so many of the people I talk to say, and I talk to a lot of the kids who are helping the parents, they say, you know what, my mom and dad took care of me, they provided for us, I now have a great job. I own my own home. We're well off. We don't really need it. We just want to make sure that they have what they need to be taken care of, to have a good retirement, to not be going without, because that's what I see a lot of times happening right now. Is a lot of seniors who are going without because they feel like they have to pass on this house to their children, and in many cases, the children aren't even concerned about that. Right? It's not even something that they're worried about. So, using it as a way to really improve your day-to-day life is important, and most of the time, that's something that the kids want, because otherwise, what happens is the kids have to end up funding that for their parents themselves. They have to take care of the medical expenses. They have to take care of the maintenance of the home. They have to do whatever it is. And so the burden's falling on them right now, instead of it being something that's dealt with when they inherit the property.
Right.
So that's the biggest thing that I'm seeing. But again, a lot of times if we put this together as part of a financial plan up front with other advisors, it can actually increase the amount of assets that can be passed down to the next generation, so that even though they may not be getting as much equity from a home, they're actually still getting more passed down through the estate than they would have.
Oh, that's great. So Shane, if some of our viewers want more information, how do they get in contact with you? And what information will you need from them?
Sure. So best way to contact me is by phone or email. My phone number is 858-829-7186. Email is Shanne, SHANNE, S as in Sam, at RWM Home Loans, or I'm sorry, RWM Loans, no home, .com. And then I do have a website, San Diego Mortgage News.com, that people can go to and learn a little bit more about what I offer and reverse mortgages in general. But it's really simple for me to run some numbers on a reverse mortgage. Basically, I need to know the date of births of the homeowners that are going to be on the reverse mortgage, the address, so I can look up the home value, and then is there any mortgage on the property currently? Because the amount of money that's going to be available through a reverse mortgage is going to be based off of really three factors: their age, the value of the house, and where the current interest rates are. And we plug that in, and that's going to give us the information to show what the different options are for the reverse mortgage, how they can tap into the money that's available through a reverse mortgage. And I can then go through in more detail with them as far as what plans are available.
Great. Shane, I want to thank you for taking time to explain a few of the details of the reverse mortgage. And again, for the viewers, thank you also, and stay tuned for future questions and answers for financial strategies. Until then, see you guys later.